Hey there, guys! Welcome to another episode of Inflation Report, and today we've just got a quick update for you today. A quick update. So this episode's going to be nice and short compared to the regular episodes. There'll be no IRPI calculation today. That is going to be a monthly video that I put out. This is the video that where we track inflation together, where I'm calculating it using my own methodology. And I'm giving you three figures because I think that inflation is different for different people. And so we're calculating it using our own methods. So today's just going to be an update. We had a big release last week. We had the US CPI numbers came out. So we're going to take a look at that together. We're going to explore it and hopefully we'll think of some interesting points that maybe you guys haven't thought about. So yeah, let's go ahead and take a look at that then. So let's bring up the first slide then. So trying not to make it death by slides, but here we go. So the US CPI release came out and it was for April 2021. It was for the month ended April 2021 and it was 0.8%. And think about that. That's a high rate for a 1 month. For a 1 month, month on month figure. That is high. And the point is that if this trend of 0.8 continues, things could be quite serious. And so what happened was I've got my data sheet, but basically month on month inflation in the US has been going up by about 0.2% every month. So it was 0.6 back in March, 0.4 back in Feb. And if this trend continues, we could find ourselves with huge amounts of inflation. So let's go on to the next slide. And so the trend, this is what I was talking about. So it was 0.8 in April that's just been released, 0.6 in March, 0.4 in Feb. What if it's 1 in May and 1.2 in June? Now, guys, this maybe isn't likely. We think it will cool off a bit for many reasons, but it's likely that this is more to do with the COVID crisis and that time of the year, the way the benchmarking is done. But the point is, if the trend were to increase, the same as the trend is growing here, we could see inflation rate of even 15% in the US if it just keeps going up by 0.2 every month. And this is really serious, guys. This is really serious because the question on everyone's mind with the increase in inflation is, will interest rates rise? Remember, that is the number one way. It's not the number one way, but it's one of the key ways that the government can manage inflation, and that is by raising interest rates. And the way that works in theory is by raising interest rates, we reduce the amount of borrowing, we reduce the amount of new money being created by banks, and spending will fall, and therefore prices will adjust down because there's less money floating around in order to chase these goods and services. So let's look then at the next slide then. So will rates rise? That really is the question. Will rates rise because of these inflation concerns? And I think the answer will be no. I'm of a 95% probability that rates will not rise. And we're going to just quickly go over three key reasons why that is and why I think we will see rates continue to stay at near zero. So the first one is social security. So remember, guys, if interest rates go up by 1%, 2%, 3%, this will cause the stock market and the bond market to all completely crash. And I won't go into the details of why, but it will cause financial markets, real estate, anything that is leveraged, anything where people are borrowing money to invest, particularly things like real estate. Think we all have a mortgage on our property. If those interest rates go up, these asset prices will plummet. But social security, well, look, we've got an aging demographic in the Western world. We have an increasing ratio of older people to younger people in the population, and the older people live their lives from the pension benefits that they have, whether it's annuity or some kind of government pension. But all of this is funded by the financial markets and by investments. So if we raise rates, we could compromise the social security net that is propping up the aging population. The government doesn't want to do that. They don't want the pensioners to have no pensions. Okay, number 2 then, guys, we've got government spending. Now, remember, we're talking, will interest rates rise? Well, look, who loves spending more than even you and I? Who loves spending more than even big corporates? It's the government. They love to spend money. And guys, the deficits last year were obscene. They were so high. And that trend shows no signs of calming down. Spend, spend, spend. Free money here, free money there. No fiscal responsibility is not even on the mind, it seems, anymore. I mean, maybe you could argue it is a little bit. They're trying to be a little bit conservative. They're not just giving out infinite amounts of free cash, but you know, the matter is that the governments like to spend, and you know, the government, if it wants to overspend, is going to have to borrow. So they're going to want low rates so that they can finance all these government packages. Just some examples. We've got the furlough scheme in the UK, which is costing a fortune. We've got Joe Biden in the USA is saying, hey, look, we need to do a big infrastructure plan. He says it's going to be $2 trillion. Guys, this money's got to come from somewhere. And if it's not coming from taxes, then where is it coming from? Okay, then let's move on then to the third reason why I don't believe interest rates will rise. Remember, I believe that there is a 95% probability that rates stay low. And by low, I mean below, let's say, 3%. I don't think they will go above 3%. Base rates, that is. So the third reason then that I don't believe rates will rise is it's just unpopular. And this is a mixture of, you know, the two things we've looked at already. But look, if the government turn around and say, guys, I'm really sorry, but we need to raise interest rates, and I'm afraid your houses are going to halve in value, and I'm afraid that your stocks and shares are going to halve in value, and I'm afraid that your pension is going to halve in value. What kind of a policy is that? Who's going to vote for that kind of a policy? Fiscal responsibility is unpopular. And remember, in the Western governments, we have short-termism. You know, we're not like Vladimir Putin, who has been in power in Russia for decades. We're not like the Chinese Communist Party, where people over there have been in power for a very long time, and they can have a more drawn-out strategic plan. No, in the Western world, in the UK, in the US, we have short-termism. We tend to have 4-year stints of government, and they're not going to want to do something unpopular because they're not going to get voted in next time. So anyway, guys, that was just my 20 cents on this issue. Quick 3 reasons why I don't think interest rates are going anywhere, and why I think that inflation will continue to grow and grow and grow. Hence the reason for this channel, guys. We're studying this, we're learning, we're tracking it real time, and this is history is unfolding in front of our eyes. And we might not see it yet, but you know, we're going to be here as inflation goes on. So yeah, I hope you enjoyed this little update, guys, and I'll be with you at the start of June with the IRPI numbers for May. Take care. Bye bye.